Hello everyone, I'm Nikhil Mishra from Setu Capital. So we'll be looking into Rajratan Global Wire and its Q2 financial results. So this company posted results and there was a sudden 20% downfall in its share prices. So what has changed in the near term? We'll look into the updates which the company has given. What is the understanding of the various market participants? What went wrong? What is the future expectation from this business? How will the business change? Has there been any fundamental change in this business? We'll look into all of those factors. So this is the stock chart which I was talking about day before yesterday. Suddenly the company posted its result and there was a 20% downfall in the price. Now let me tell you one thing. This company just a month ago was available at around 1300 rupees. So from that time point in time, it has come down to around 987 rupees. Although this is a knee-jerk reaction, which and the stock might uh, might come back, but certainly there has been some change in the market understanding, which led to this sharp downfall in price. This company, when it was trading at around 1300 rupees, so it was available at it had touched a valuation of approximately 49 times price to earning ratio, which was quite high. At present, this is available at around 36 times. So we'll be discussing about whether this is also a relatively high valuation. Was it justified to have for this company to have gone to such elevated value? So, so for a brief understanding about the people who don't have a basic idea about this businesses, so this is one of the largest bead wire manufacturing company. So bead wires are basically an input which goes into your tire manufacturing. So this company has the world's largest plant of bead wires in Pithampur in India. It enjoys around 45% market share in India and 24% market share in Thailand. It has its plants in India and Thailand. Now the Thailand plant is basically used for exporting to Europe and US, while the India plant mainly caters to the domestic requirements of tire manufacturers. This company is into a very interesting industry. There are very few companies which are available in this industries. There is a basic reason behind that is that the tire manufacturers take a very long gestation period for for approving any bead wire manufacturer, because it's a small input, but it's very important for the performance of the tires. For an example, Michelin in itself took around 2 years in order to approve their bead bead wires. They kept on testing it for around 2 years and then they gave the go ahead. So that shows the barriers to entry. Now there is a lot of trust as well, and this company uh, works on a structure that if there are raw material input prices hikes, then it will pass it to um, s- its customers, and if there is a raw material price decline, then then also it will pass it on to its clients. So let's look at the financial performance. So in a nutshell, all of these I have taken from the investor presentation of company itself. So there was the problem came in terms of financial performance. So operating revenue dropped by 7% year on year. Because of the operating leverage, the EBITDA was lower by 25%, and profit before tax was lower by 28%, and profit after tax was also lower by 28.5%. Now, the company says that what led to this factor was that there was higher inventory along with its customers, and the raw material prices, since the higher inventory, base their main source of raw material is steel. Steel prices were relatively high in last quarter, so they also had maintained inventory, and that's why there is an impact in gross margins, because the cost of the raw materials at that time was higher as compared to means this what now. So that's why there is a gross margin impact. Now Thailand plant basically caters to the Europe and USA, and due to the means European crisis and inflationary factors, the there was not much requirement, and they had already kept their inventory at higher levels because of the supply chain situations and higher freight rates in the past. So there was not much requirement in terms of export, and that led to the downfall of exports from Thailand plant. The good A few good things which I found from the balance sheet, and the interesting part is that in the half yearly statements we also do get the balance sheet and cash flow. So you can see that the trade receivables over here have declined a bit. It's with the decline in sales, there is also a decline in the trade receivables. That indicates that the company is not pushing its product. Uh, it's good that the sales, with declining sales, trade receivables have also declined. So in terms of volume numbers, and one thing has to be noted: this company, in its past, all of its communications has always guided in terms of volume rather than in prices, because they indicate that it is a better indicator of how their performance will be. So as you can see that the quarter to quarter comparison, there has been a in India's volume, there has been, it's more or less flat by 5% it has grown, but in case of Thailand the volumes degrew by 20%. That's why there was a decline in the overall volumes. Now, so as per company, there was a low demand, that is a risk. So what they have done in order to mitigate the risks of low demand, they have started plant shutdowns to streamline its inventory in line with inventory corrections. But this is not something which we as investors want. Means, and the company also understands that if there is going to be a demand, nobody will shut down its plant and simply do maintenance. These maintenance etc can be tackled with in different shifts and with different methodologies of doing batch wise productions etc. But over here, because of low demand, they simply thought of initiating plant shutdowns and doing some sort of improvement in their supply chain or performance etc. In order, and there was also foreign currency fluctuations in both plants. You can see that the INR has been depreciating. So now what they have started doing is procuring raw material from India itself in order to means circumvent the foreign currency fluctuations. Now, what is the current and future outlook? The management, the uh, the stock market eh, was a bit means had reacted negatively. The main reason was that in the past, the company, if you even hear their past con calls, you will understand that the company's management was indicating a 20 to 25% top line growth for this year as well. And now what they're guiding for a strong double digit growth, which might happen in somewhere in the range of, let's say, 13 to 18%, 13 to 15, 16%. The management, the market and the analyst and the retail community was expecting around 25% growth, but the growth rates will come down, and so will the profits. That's why the markets have adjusted to them. The management has guided that over the next 3 to 5 years, they will be generating around 20% CAGR, compounded annual growth rate, which is good in itself. But it's certainly lower from the expectation which the company's management has built just a quarter ago. Now this is interesting that such so many things can change within a single quarter. The Now it's not anybody's fault. If the management is able to see that yes there is a demand outlook, they don't have that much long visibility, and a lot can change within a year because everything is done in terms of accounting unless and until the the products are delivered they can't account into them, and the cancellations can happen anytime. So this is a very good company, there is no doubt about it, but there was a management shift in the guidance which led to the sudden knee jerk reaction in the stock. So if you have purchased the stock at relatively higher valuations, are at present at 36 times earnings, which is also not not cheap. It is not at all cheap. But this company has been improving its performance and is one of the considered to be a good stock, good quality management in a not very good industry, which is good because there will not be a lot of players who will try to get into this business. There is a long gestation period, so there are barriers to entry. There is a moat around the business. So in case if you have purchased it at higher levels, you will have to wait because the markets, unless and until the growth rate returns, they won't re-rate them the way they have. The stock was re-rated from let's say 25, 28, 30 times to 45 to the high at the highest point at 50 times. Now it has come down to 36 times. The next few quarters will determine how the stock price reacts. But this is a good company, and if you're a long-term investors and have a position in it, it's better to stick on to it because this management has done exceedingly well. If you just have a look at the past 5 years or 3 years chart, you will be surprised. Just in last 1 year as well, this company has returned around 100%. But obviously, everything comes at a price, and this company is not as lucrative as it was, let's say, 1 year ago, because it was because there were two factors. There was earning growth as well as re-rating factor. Re-rating in this case may or may not happen. If the growth rate doesn't come back, re-rating won't happen. Indian economy in itself grows at around 13%, 14%. I'm talking about the nominal GDP. So, so it is expected that the company should at least grow at the rate at which the GDP of India, nominal GDP of India grows. And that's why it's expected that these companies should, if they grow at higher rates, then only they will command higher valuations. So this brings us to the end of this presentation on the quarterly update of Rajratan Global Wire. In case you guys have liked, if in case you guys have liked this video, then I would recommend you to subscribe because I do make mainly small and micro cap and mid cap related analysis. You might benefit out of them. So in case you're new to this channel, do subscribe them and do like my video because it helps in the YouTube algo. So, and for any stocks or mutual fund related services, you can contact us. We'll be happy to help you in your wealth creation journey. Till then, thank you very much.